Welcome, everyone. This is a re-recording of my presentation that I gave 2 days ago. Unfortunately, we had some technical issues with sound, so now I'm just simply repeating what I said, and hopefully it will be useful for all of you to watch this and benefit from it. I'm sorry we weren't able to do this yesterday, but we were giving a talk at the Energy Transition Critical Minerals and Mining Investment Conference, talking about our gold, silver, and copper forecasts, some of which we'll be sharing with you today. Remember, this is an update to our December forecasts, when we predicted what has happened in the recent markets. So for more detailed views, we recommend you fast forward that. Okay. By the way, if you notice, I'm not in my business suit since it's not during the week. I'm dressed for tango, which I'll be dancing in a couple of hours. So I'm in my black tango outfit, but normally during the week you'll see me in my business. Okay, the purpose of this talk is to make you less surprised by markets. Like all market professionals, we try to promise you to make more money with less risk. And the way to do that, in our view, is to have some idea of what markets are likely to do and to be prepared whether they go the way you want them to go or the way the market decides to go. We will be talking about some Trump winners, some obvious ones which are making money. We'll give our gold and silver price forecasts, since we seem to be doing a good job of that. We'll be talking a little bit more about the financial astrology aspect and a few best stock ideas that we've updated from our December. We also have 6 sponsors who will be giving short 3-minute views on why you should go to their website. These are all interesting companies. Ideally, if you like what you hear and find it interesting, we recommend going to their website, downloading their PowerPoint, and if after reviewing it you want more information, then sign up at their website for investor news, and of course put it on your trading screen if you're a trader. So we have 6 interesting choices for you. This is the usual disclaimer that all market forecasts have to give, and basically what it says is if you lose money, it's not my fault. It also says, however, in the small print, that if you make a lot of money because of this conference, we would appreciate your sending an extra bottle of champagne for our wine cellar. Housekeeping, we obviously record this. This was a live presentation, and we don't like to take notes, and you can simply review it on YouTube. It's also, we welcome you to share this with your friends and colleagues. Okay. We added one slide because of our talk yesterday, and that forecasting 225 is as simple as 1, 2, 3. What is that? Number 1 is that in the first half of the year there are multiple crises, geopolitically as well as economically, such as with tariffs. Our view is that there'll be a partial resolution of these crises by mid-May, at which point the focus will be on the economy slowing and recession-like or recession conditions. Now, we'll be talking primarily about intermediate term, which is 12 to 15 months. Longer term, of course, fundamentals matter more. And if you need some short-term opinions, we do have a Twitter and Telegram account where we give some of our trading ideas. Again, the whole idea is to be less surprised by markets. We believe we can identify 20 to 30% of market surprises, which can be very profitable. Theme which we gave is to survive and thrive in 25, and this yellow alert lasts till the first quarter to first half of 2026. We did forecast a correction, which we've already had, and now the question is, are we in a bear market, or will we go into a bear market? Well, in the last 2 days, more than 3 times as many NASDAQ stocks went to their 52-week lows compared to their 52-week highs. So there were a lot of stocks in bear markets. The big picture euphoria that we felt and saw in December ended in Q1 as we expected. And upcoming with the March and April 2nd TIFs, all the November election rallies have been lost. We believed, when everyone was euphoric, that we'd at least have recession fears, if not a recession, in the first half of this year, and if we don't, in the first quarter of next year. That's a very important point. And when I say recession, you'll remember the last time that both Japan and the UK had 2 negative quarters. They were in a recession, whereas the US, which we predicted, had 2 negative quarters, was not in a recession. So we'll leave those games aside. No matter what, we have a slowing economy. There's been a terrible debt crisis that has to be dealt with, and if we dealt with it head on, at the end of it, we'll be in much better shape. If we continue to ignore it, which I don't think this current administration will do, then it's going to be really bad. So in the meantime, we will have volatility challenges spring and summer 2025, but that is to say it's traders' paradise, and there's no question this year that it's a stock pickers and traders market. We've sort of said that for the last 2 years. It's only been half true, because if you had done index investing, you probably would have performed as well as most stock pickers or traders. That is not the case, obviously, in 2025. And here's a very simple prediction that you can take to the bank. Before November 2026, oil, eggs, and interest rates are going to be lower. No question about it. So again, it's a little bit like a bear market. Right now, everyone's buying on the dip when we hit the correction, and it was a likely short-term bottom, but we think there's a good chance that it's going to continue. In any case, the risk is going to continue. No question about it. There are many key market negatives as well as positives. We gave them all before. I'm not going to repeat them, but I will want to point out 2. One is the high global recession odds. And previously, it was thought that it would be ex-US. But given what's going on with tariffs, we can't take the US out of this equation. And the second is that asset managers are holding the lowest amount of cash in the last 20 years, and that is bearish. So all the other issues, from high valuations to tightened credit, blah, 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 credit card delinquencies, everything is there, and there are some positives as well, although the negatives far outweigh the positives. But there is some good news, because difficult roads often lead to beautiful destinations. As Warren Buffett has said, bad news is an investor's best friend. And we're all familiar with the idea of being fearful when others are greedy and being greedy when others are fearful. However, we did not see fear even with this 10% drop. People couldn't wait to buy. People are fearful when they don't want to buy. We're not there yet. We may be there this summer, and if not, we're likely to be there the beginning of next year. So again, like inflation, inflation can be your friend as well as your enemy, and bear markets can be your friend as well as your enemy. So what is our view? We like having some cash, unlike other people, or access to cash. We have downside targets of 10, 20, 30%, some of which we've seen. We see in a flight to quality that investors go from speculative securities, growth, technology, and cryptocurrency, and they move to value. So value stocks on a long-term basis will finally, after many years, outperform. And then a market-neutral long-short is the way to go. Buddha says someone whose hands are closed all the time is deformed. Someone whose hands are open all the time are deformed. To me, if you're a long-only fund and we know that markets go down 1/3 of the time, that means 1/3 of the time you're losing money. So we believe in being long-short. Currently, we're more bearish, so we're long 1 for short 2, and we go on a 1, 2, 3 number. But sometime before tax time, April 16th, we'll be on a 1 for 1, equal amount, long, short. So I'm a cosmic value investor, which means I like to be in harmony with the cosmos, but I'd like value. There are other styles that work, such as momentum, and they certainly are very valuable in trading. But for investors, I like to buy low, sell high, and when the stock becomes overvalued, then I either sell it, sell part of it, do a trailing stop, or write covered calls. I just don't sit passively. Although, if this is not your profession, you don't want to spend all day, don't worry about that. But you should have your portfolio correspond to who you are, what you like, and what you believe in. You get more and better sleep that way. So here are 5 Trump winners we've been recommending to our clients for a while. The first is oil. Obviously, with the election of President Trump, the oil situation has gotten better because of drilling and regulation. We like Riley Exploration Permian, which is a company that will be presenting for us in April. And it has a nice yield of 7%, 5% and a 7 PE, and a very well-run company. And then we've liked for quite a while Diamondback Energy, which has done very well in the last 6 months to a year. The one that came to us a few months ago was eggs. Obviously, when the government said they're going to spend $1 billion to support the egg industry, it was a no-brainer. The obvious play is calm, and it's something you can track and make money on. Steel and aluminum, obviously, have some benefits. U.S.-based Olympic Steel is a very nice one. And Nucor, of course, is a larger one you can deal with. Naturally, U.S. manufacturers are likely to do well. 2 that we like is Rockwell Automation. And then Ford. Now, a lot of people, we looked at this because a client had it. It's a nice 7% dividend. PE is only 7. So while there are obviously tremendous challenges, we don't see why we won't get an outperformance over the next 2 years. It's good buy and hold. And our last is Friends of the Family, which is Tesla. We've been recommending shorts for friends who wanted to buy it. We said it was going to go to 125 to 122, which held perfectly, where we stopped shorting it, except where it goes up again. And why did we recommend shorting it? EV sales are down, the stock price is too expensive, 116, 140 times earnings, and Musk has a political target on his back. We are not buying it here because we believe there's a 50% probability that this support at 222 will be broken. We're likely to go to the 52-week lows, and around 150, we like it. We like to buy at a discount. And the future, which is the self-driving technologies, and especially the Optimus humanoid robots, I think are going to be big winners in the second half of 26. Now, we may be trying to get it too cheap, but the stock is too expensive for us. But it's something that, obviously, on an intermediate long-term basis, will do well, in our opinion. So those are 5 winners you can play. Now, we had 4 big unknowns previously. Now we have 5. Obviously, is the Fed lowering rates or be higher for longer? Our view was correct last year. The Fed is saying it would have 2 interest rate reductions. Our view is 0 to 3. We don't know the answer. But if it is 0, we will be at least 2 by the first quarter of 26. So it depends on the timeline. Ukraine, I believe the war is going to be mitigated very shortly, certainly by May, and that will reduce the geopolitical problems in the world. There are plenty of others, whether it be Iran, whether it be China, but still there'll be a reduction, which will affect the price of gold, which we'll talk about. The BRICS de-dollarization, I think, is less of an issue for the next year and a half. Why? Because while there's more country-to-country direct, there'll still be 50% of the world's trading at least in the next year and a half. So it's less an issue for us. Donald Trump is a real positive for the market. You may not feel like it today, but obviously markets got ahead of itself. And if you look, as we'll show you shortly, where it was on the election time, where it was January 1st, it did very well. Now, of course, there's no gain without pain. So right now, with all the tariffs, there's going to be issues. But over time, because of lowering taxes, because of less regulation, even my democratically inclined friends are sort of were previously unhappy because they were going to make more money with Trump. Now they're half feeling happy because the market's down, but I don't think that's going to last. So it's a very interesting feeling. And of course, the big issue is April 2nd, how Trump is going to deal with the tariff deadlines, reciprocal tariffs, how sector-specific tariffs, and how we're going to deal with friends and enemies. So that's an unknown that we have to deal with, which means trader's paradise. FOMC is, again, I think the consensus is there'll be one in June, possibly. I think there's a good chance that we'll have one by July 30th, but there are issues of stagflation. So the issue in the bond market from the longer term is slower growth and recession talk. No one was talking about, well, very few people were like myself talking about the recession coming up, primarily for astrological reasons as well as economic reasons. And there are pockets of stubborn inflation, shrinkflation, discounting, and the idea of dynamic pricing. You can buy something for $10 that I'm going to buy for $8, and someone else is going to buy for $9. So what numbers is the government going to use? And obviously, there's going to be a lot of inflation, at least initially, in labor. So it's our 1, 2, 3. Multiple crises now, partial resolution coming up by May, and that's why we're doing a May update, and then slow growth and recession, more or less, until mid-26. Trump is still pro-stock market. He's wisely saying it doesn't matter every day where it's going. It's more like Warren Buffett, who, by the way, is raising a lot of cash for good reason. And effectively, over time, he's very concerned. Short term, however, he's not concerned, or at least not expressing it. But his policies in general are good, very pro-Trump. And here are some numbers we can look at, where the market went to, the highs. The only thing that's still doing well is gold and silver, and we're reversing ourselves on that, as you'll hear in a moment. But these are the numbers we look at. So fundamentals don't matter until they do, but as a cosmic value person, I look at gold, silver, and what's its valuation. Now, gold and silver are massively overvalued, yet for many years they were undervalued. So that's not a terrible thing. And we're going to show you why we come up with these numbers, why we say gold is 23.69, why we say silver is only 26 to 28, despite everyone saying how it's a silver shortage. And it's only a silver shortage because of investment demand. If you take out investment demand, there's no silver shortage. Copper, given our views, we would have recommended buying it at 340 to 360. We didn't do it ourselves. We got greedy. We were hoping for 340, but we did get 360. And in the first pass, earlier in the 485, we got out. And now we think at 5 it's way overvalued. Oil is worth about 70. It's in a trading range. And most of the time, it will be under 70. And again, as we get to the election of November 26, you can be sure that oil will not be high. However, drill, baby, drill is not the case. No large or small oil company wants to see oil down to 60 or 50. They won't make money, and they're not going to sell it that way. They will make money because of the regulation and other things, but they're not going to just flood the market. That's a fantasy. And again, S&P and NASDAQ are way overvalued, and I think we'll get to valuation sometime between now and the first quarter to half of 2026. So these are things we keep in mind. An example of one of our Twitter accounts, and when we put this out, was gold going to go to 3,000 or 3,100. We were at 30.50. Actually, 30.55 was where we went short twice. But we already had our first test now of 3,000. We went to 3,004. I don't think it's solidly tested. And silver was holding 34, and we basically felt we can see 32 first. So these are the type of things we see. And we were hedging it against some Mag Silver, which is our favorite silver company, and EMX was a nice royalty company, because when we were shorting the gold, we also wanted to be long some gold and silver stocks. Gold, of course, is done extremely well. Last year, unto this time, had a great horoscope. Right now, it's neither positive or negative astrologically. Same thing in terms of silver. So it's lost a major cosmic assist. Doesn't mean we can't go higher, but it's going to be harder for it to do so. So our gold views remain the same. We're long precious metals as an investment and a portfolio hedge for both. Traditionally, the Swiss would say 5% in gold. We would say 10% is more appropriate. For some people, 20, but generally speaking, 10% is correct. We also believe in hedging. A lot of people don't want to do that. We think if you're running a business, you hedge. And we think we're overpriced. Doesn't mean we can't go higher, but it's going to be increasingly difficult because it will require, as we'll see, more upsetting conditions. And short term there may be, but intermediate term we don't see that. We see crisis receding. So our fair value is in four parts. The commodity is worth about $2,000, and just think about where it was a year ago. Its currency, which is increasing now, is about $23.55. So gold's fair value is eventually going to be $2,400. Inflation, short term, is up because of stagflation, and then as we get to recession, it will come down. And as a crisis, which is what we're trading at, as soon as a crisis is reduced, then gold can drop $100 to $200. So we like it, but we prefer, as we'll mention over and over again, some of the quality and profitable gold and silver stocks. And silver, if we're correct, will follow gold in the beginning, which means it's positive. As gold drops, as we see, silver will drop. And if we enter a recession, because it's an economic metal, silver will not do as well. That's similar to copper, as we have a similar view on copper. Although longer term, it's a different story. So we have people with targets of 3,500 for gold, for 38 for silver, for 40 for silver, for 50. And if you go 10, 20, 30, 50 years, I'm sure that you're right. It's a question, is it in the next 18 months? We are not believers in that. We recognize it's possible. We will benefit if it happens, but we're not betting on it so much. So if there's a Ukrainian ceasefire, peace, if there's a tariff truce, we expect at least $100 to $200 gold drop. And if that seems strange to you, just remember a few years ago, natural gas was $10. Next year it's $2. So don't think gold and silver can't drop. Could we go to 3,500? Can we go to 3,100? Yes, all these things are possible, even 4,000. But is it the right way to bet? Is it probable? No. Is it possible? Yes. But is it a good time to invest in gold and silver stocks? Yes, that it is. And that's always the case for the right stocks. So what we're going to do, and I'm going to continue my talk in between, is we're presenting 6 companies with just 3-minute elevator pitches, not 18 minutes. You may like it, you may not like it. It's 2 to 3 minutes. And the reason we do this is, if you like what you hear, then we recommend going to their website, downloading their PowerPoint. Then if you like what you hear, get on their investor email list, and of course those of you that are traders and investors, put it on your trading screen, because some of these companies will be very good, but this may not be the right time. Maybe it needs a correction, maybe it needs more news, but I think these are all interesting companies that you want to pay attention to. The first one we have is DRD Gold, which by the way is the only South African stock we like for multiple reasons. Why? There's no gold exploration risk. Number 2, it's socially and environmentally responsible. And number 3, the company and its profits are expanding. That's, to me, a winning situation. So let me bring this up. Okay, give me a moment.
Hi, my name is Neil Pretorius and I represent BRD Gold. BRD Gold is a South African-based gold producer and is listed on the Johannesburg Stock Exchange and the New York Stock Exchange with a market cap of approximately $1 billion. We believe that BRD Gold is a producer with a difference, as all of its approximately 160,000 ounces of annual production is from the reprocessing of old mine waste tailings dams. This means that the company is waste neutral. It does not produce any new waste. Its impact on the environment is the opposite of conventional mining, in that by mining these legacy sites and reclaiming these mine waste dumps, natural ecosystems are restored and land is freed up for sustainable use. We're also very aware of water usage. We reclaim these dumps by way of high-pressure hydro mining, and this requires a lot of water. Through extensive infrastructure investment over the years, we now have access to grey and industrial water adequate to cover more than 90% of our total processed water requirements, and all of this water remains in a closed circuit. Then, in terms of power, a newly constructed 60 megawatt solar power plant, which we own, supplies almost half of our power needs and will reduce our carbon footprint, we believe, by roughly 50% in the years to come. In terms of financial performance, the company, as an unhedged producer that takes full exposure to the spot price of gold, is benefiting from the higher gold price. If you were to look at the presentation that accompanied the release of our interim results for the 6-month period ending 31 December 2024, you will see that the company produced approximately 80,000 ounces of gold and that it reported a 28% increase in revenues to just north of $200 million. This was on the back of a 26% increase in gold price. Cash operating profit of approximately $81 million, up 74%, and headline earnings of approximately $50 million, up 65%. Our numbers, I remind you, are reported in South African Rand, and these numbers assume a Rand-dollar conversion, which I did for purposes of this video, with roughly 5 cents, US cents per South African Rand. So they might be a little imprecise, and you may just want to double-check those. However, be that as it may, this enabled the company to declare an interim dividend of 30 South African cents, up 50% on its previous dividend, and making this the 18th consecutive financial year of declaring a dividend. So what is next for us? In June of last year, we commenced construction on a capital reinvestment program that's been long in the planning and aimed at increasing volume throughput to establish production capacity of approximately 200,000 ounces per annum, which would be up 40,000 ounces on our current production capacity. This we hope to have in place by financial 2028. Although we have secured a facility of approximately $100 million to fund this program, we have so far been able to fund it from operating cash flows, as a result of which the company is as yet free of bank debt. In conclusion, therefore, our value proposition. BRD Gold is an established dividend-yielding gold producer and is listed in jurisdictions that demand the highest standards of governance. It is unhedged and takes full exposure to the gold price, with a share price that is seemingly steeply geared to movements in the gold price, and we believe it has compelling medium-term organic growth prospects in its Vision 2028. Thank you very much.
Well, that seems like a winner to me. And we have our next company. It's a little different. BARTON Gold has two things going for it, multiple things, of course. One is it's a gold company, and number two, it's Australia, which we've added. Australian mining is a safe jurisdiction and has extremely cheap currency. So as we do periodically, there's an advantage to Australian companies.
Hello, A-Fund investors. I'm Barton Gold Managing Director Alex Scanlon, and I'm pleased to share some insights today with you about why now might be a good time to start looking at Barton Gold and our South Australian development assets. We, of course, know that the current high gold price makes low-cost development assets very attractive. During the past 3 years, we have been quickly working to position our assets for exactly this moment. In this time, we have built a 1.7 million ounce resource base, and we own the only gold mill in our region. Our target is large-scale production of 150,000 ounces of gold annually, and our strategy is to get to this large-scale objective on a staged, lower-cost, and lower-risk development basis. This also means lower dilution, leveraging our existing infrastructure. Last year, we published an initial scoping study for our 1.6 million ounce Tunkillia project. This demonstrated a fully costed model to deliver 130,000 ounces per annum of gold at an all-in sustaining cost of 1,917 Australian dollars per ounce, or approximately $1,250 per ounce. This is a bottom quartile cost-producing asset on both an Australian and a global basis. This project model also delivered a 40% equity IRR and a 1.9-year payback on an unlevered basis. In the next few months, we'll be delivering an optimized scoping study, materially improving on all of these project metrics. In parallel, we are also now working to map out the ideal strategy, the costs, and the feed materials to restart our existing fully permitted central Gawler mill. This would see Barton Gold transition into operations from 2026. In the next few months, we will deliver multiple updates about the plan, the costs, and the timing of this shift, and we are already considering multiple low-dilution funding opportunities to do so. So, during the next 6 months, we expect to share a lot of new insights, resources updates, and study results as we finalize our strategy to move from developer into producer and to show the market a low capex start to a 15-year growth and development pathway from 2026. As a company, we generate millions of dollars annually internally through asset monetization initiatives and gold sales. This has resulted in a much lower dilution to our existing shareholders and a much stronger base of value compared to many of our junior gold peers. The start of operations will mark the culmination of our strategy to crystallize a realizable, multi-billion-dollar valuation pathway with a fraction of the capital typically required to do so. With only a US $35 million enterprise valuation, now might be the time for a close look at Barton Gold. The Barton Gold team are its largest shareholders, and we are working as hard for your investment as you did. Thank you for your interest in our company, and I look forward to meeting with many of you in New York in the coming weeks.
Okay, so the big picture is there's a global slowdown, recession coming. Traditionally, we had recommended gold, entertainment, and cash. Gold and entertainment did very well in the Depression. I think it's a little early for some entertainment, although there are some stocks we do like. And cash, we think, is a good idea because distressed investing is a big area. We recommend a precious metal trade for some companies to hedge gold and silver to a certain extent and buy gold and silver stocks, which will outperform. Now, in the last 2 years, that's not been the case, but we do believe it will be the case over the next year or two, and there are examples of stocks that is the case. We'll show one example. So, to me, it makes more sense. Why would I spend $3,000 for gold when I can buy it for $1,000? Why would I spend $34 for silver when I can buy it for $10? I'd rather buy wholesale rather than retail. Of course, we're talking about profitable and producing or near producing companies. Technical analysis, obviously we're below the 50-day moving average, we're below the 200-day moving average, so there's some concern. We need a catalyst to get it above, and it's possible, but the risk is extremely high, and therefore to be long short or to have some cash makes some sense. Day trading, of course, always works. Now, a little bit of astrology. What we didn't mention before is that it's a U.S. Pluto return, and any student of astrology, even a 3 months student, would know that one of the key factors of Pluto is to bring to light that which was previously hidden. And can you think of a better discussion of Dodge? We talked previously about the Jupiter-Saturn square, and that's one of the reasons, and that's within a month or so, why it went down around August, went down December, and we have the same thing coming in June, and it's one of several factors, so we do see the market dropping again. We have a Saturn-Neptune, which is a rock on a cloud. Think of that image. It's near exact in the summer, so those are our recession-like conditions, and in February it's absolutely exact. And then there's a solar eclipse, which will be very interesting, which we'll talk about later. Jupiter square Saturn are the business planets. They are being challenged. It's already 2/3 of the predictions have come true. We believe the third one is also going to come true. So again, survive and thrive in 25. I would be more cautious. And if you want to have some examples of what it could be, the Saturn-Neptune, which is coming up, think of the fall of the Berlin Wall, and those of you that are mining people know the Bre-X mining scandal. We got our clients out 2 weeks before because of this Saturn-Neptune aspect, and they were very happy about that. So this is tremendous risk. Again, doesn't mean it's going to happen. These are probabilities, but one should be prepared for them. This is very interesting. Look at the eclipse path coming up, April 8th. Mexico, U.S., and Canada. Ain't going to be the same, is it? Going to be, should be very interesting to watch. Okay, we've talked about the recession. We don't need the reasons. Country focus, we still like the U.S., a little bit less, but we still like the U.S. Canada we like, especially for mining. The astrology is positive. It's a cheap currency. It's got resource advantages. So we would definitely increase our Canadian exposure. We've just added Australia exposure, again, because of the cheap currency and the resource advantages, as well as a very safe jurisdiction. Argentina, again, made a lot of money. It's a happy hold. It's short-term a buy, although it will take another year, year and a half, although the real estate market there is doing extremely well. And Israel is now a special situation buy. So the mining picks, our main point is that even if let's assume that gold and silver goes up, we believe that the gold and silver stocks will go up more, especially in the future. If they go down, initially they will drop more, but once they drop, they are so undervalued. Today, most gold stocks are acting as if gold is between $1,900 and $2,100. Most silver stocks are being valued between 19 and 22. So they've got to fall a long way, much more than we expect, for them to even not be deep value. Our mega caps are the same. We've added Kinross, very solid gold company, to Agnew Eagle, DRD Gold, who's presented, and Wheaton Precious Metals. These are all safety ones. They're not going to be doubles and triples, but they're going to do very well. For market cap, we do like our EMX royalty and Step Gold, and we added Barton as well as Gold TERRA, who's a presenter here. So these are just some of the picks. You can look at it before. This is our list of what we look at, and constantly we're adding and subtracting if there's a major move or a major failure. Silver, we have our Mag Silver. We've added one, which is Abra Silver Resources, and that's because it's an Argentine play and also a very good company. Silver One and Vizilla are all very strong, and we have quite a number of other companies that we watch as well. But again, I would rather buy silver at $12 rather than retail at $34. It's just the way I was brought up. Copper, we believe that copper is overpriced and is going to drop again because of a recession. We added Hudson Bay Minerals for that reason, but there will be other companies that you can watch. We'll be talking about some of them more in May because since we're sort of bearish short term, we're not adding, although we have plenty of exposure here already. Clean energy, again, it's not quite the time. And now we're going to introduce a company we presented before. It's a biotech that's been down 90%. There's been lots of issues with the stock that could have been done a lot better. But the point of a stock like this is that if there's good news that's fresh, it's a quick tradable 2 to 4x, which has happened several times before. We take out some profit or play it again depending. Again, the stock down 90%, if it disappears, is a problem. This one we don't think is going to disappear.
Hi, my name is Lisa Conte. I'm the founder and president and CEO of Jaguar Health. For those of you who have heard the story before, let me give you a quick update. Classic definition of insanity, doing the same thing over and over again, expecting a different result. We have been languishing in microcap valuation for quite some time now. Equally crazy, changing the approach, changing the information, and expecting to get the same results. This is the season of catalysts for Jaguar Health, for programs that we've been working on in some cases for 8 years or more, and a convergence of catalysts in the very near term, starting in the second quarter of 2025. We have 2 major programs, 5 major clinical regulatory catalysts. The manifestation is the opportunity for business development deals, non-dilutive upfront payments for licensing and rights to our products. In the rare disease program, we have 4 phase 2 clinical trials. One of those programs is an investigator-initiated program for MVID, an ultra-rare disease where children live on parental nutrition from the moment that they are born, 20 hours a day, 7 days a week, because they can't absorb the nutrients of life. The opportunity to reduce parental nutrition by 10% or more is life-changing, has never been done in these patients, and is the equivalent of hitting it out of the ballpark. We've already spoken with regulatory agencies, and if we're able to achieve that, we could potentially have approval on a single-digit number of patients as early as 2026. These are 2 conferences, that one is in April, one is in May of 2025, where with positive results, we could have nice poster and abstract presentations. In our second major program, cancer therapy-related diarrhea, we do have statistical results in the prospectively defined subgroup of breast cancer patients in our phase 3 clinical trial. What we are seeking here is a meeting with the FDA to discuss these results and figure out the most efficient pathway to bring Mytesi to breast cancer patients. These are targeted therapies that patients are living with, metastatic patients, every day for the rest of their lives. Diarrhea is an unacceptable side effect. It is not tolerable. It affects quality of life as well as the ability to adhere to therapies. And metastatic patients want to live, not just exist. In the doggy area, we have a product for chemotherapy-induced diarrhea that we're looking to expand with a business development deal to general doggy diarrhea. So each of these programs can lead to a major business development deal. Thank you very much. We're looking forward to the second quarter of 2025 and beyond, and appreciate your interest in Jaguar.
We're going to do a company we presented before. It's a very inexpensive stock, under 5 cents. It's amazing to me. It's a company that we like. There are a number of reasons for it, and it's primarily because of the president, who we know and like. He's presented for us multiple times. He's been very successful in the past, so it's always good to bet with winners. There's relatively low risk. I'm surprised that they haven't quite succeeded to the level, but this is something, if you want to put a few pennies in, it's definitely worth looking at and certainly following the story.
Good morning, everyone. Gold above $2,000. What a time. And it's just starting, most likely. Gold finally is hitting the highs that we've been looking for. Gold TERRA is one of your options at $10 an ounce, with 1.8 million ounces in the ground, already outlined. Back in Canada, Northwest Territory, with infrastructure as well. A very compelling story that you should look into it. Now, our multi-million ounces potential goes through the forward-looking statement, cautionary statement. You can have access to our full presentation on the website of Gold TERRA, which is listed at the end of this presentation. But mainly, what is Gold TERRA? Located in Yellowknife, covering about 1,000 square kilometers of ground, including the purchase of the past-producing mine, the Coal Mine, which is owned currently by Newmont. We have a lot of shares outstanding, yes, but we have very good shareholders. Shareholders including Mackenzie Fund, Eric Sprott, US Global, Ingalls Snyder's from New York, Newmont, and myself as a large insider. Now, why I'm such of an insider? Because I believe in this project. We've been working on it for more than 5 years, including the last 3 years on the Coal Mine option. We spent $11 million, outlined 542,000 ounces near surface, which is very important for the start of a new project. And of course, we need more drilling. We intend to drill more in 25, 26. We have one rig turning on the project site as we speak. We would like to drill more drilling, and hopefully we will in the current process. And if we do our drilling and complete our feasibility study and permitting by the end of 2027, we could be building in 2028 and producing gold in 2029. This is our goal. But at every step of the way, we're de-risking the project, and the project becomes more valuable for the shareholders as we de-risk the project, all the way to gold production. So there's many exit points. But today, you have an option to buy shares of Gold TERRA for $10 an ounce. Why is it so important to be in Yellowknife? Well, because the potential is there. There's already mined 14 million ounces. On the Coal Mine, they mined 6. And I'll show you in a moment where the 5 million ounces came from. But look at this surface map. This surface map outlines the infrastructure that we have. We're right in town. Everybody goes home at night. Starbucks, Tim Hortons, you have your coffee, 10 minutes from the drill. And of course, you have the infrastructure of the old site that was shut down in 2003, 20 years ago, when gold was $300 an ounce. There's a lot of very good infrastructure that you don't have to reset to start a mine. And here's the potential. 540,000 ounces of gold already outlined. The red box contained this 5 million ounces that was mined, including 650,000 ounces at 11 grams that was left in the mine when they shut it down. And the drilling program we planned for 2025. Now, this is the end member. Pouring gold within the next 5 years in Yellowknife. Thank you very much for your support and your interest.
Okie dokie, we're getting there. Okay, we're going to go over this a little briefly because most of you have already seen this in some detail in our December report. We believe, number one, you should have both inflation and deflation protection. Short term, there's still stagflation issues. As we get to later in the year, as we get to beginning of next year, deflation is going to be an issue, which means distress investing, of course. That will be good for certain real estate and REITs, like 2008, but with patience. However, there will be a lot of bankruptcies and probably merger and acquisitions. We've given before a list. I'm just going to let you, I'm not going to repeat it. You can just stop the screen if you like, companies that have done well and will do well, but conservatively. We believe in distressed investing, deep value, which is why I won't buy Tesla at 222, even though you can trade it. I would buy it at 150, still very high PE, but with it has value. So there are things to buy, but we think it's better safe than sorry. Number 3, day trading, if you're capable of it. These markets are just a piece of cake. For us, 60% of the time. 40% of the time, we don't know, we stay away. It's always good to trade with confidence. We can't trade every single day profitably. We can trade 3 days profitably, and 2 days just stay away. And we look for compelling valuations. 52-week highs and lows, and we're starting to see them more and more. However, there are some we prefer 2 years. Remember, the market's been up 20-25% last 2 years in a row. So if you're down 10% and you were up 25% last year, that's not pain. If it goes down 20%, then there's some pain. Various sectors, we all know what's interesting. Drones, obviously, robotics, etc. Quite a lot of sectors you can look at. Depends. But you have to watch it. Imagine if you were in quantum computing, they went up 6 times. Ridiculous. Then they drop a lot. So when you're dealing with, shall we say, momentum craziness, make sure you take some profits on the way up, because you'll probably see it on the way down again. Energy companies, we've done well with that. Makes sense. And to be cat-like. This is very important. Accumulate, buy on weakness. Sell if you like on strength. Favorite stocks and commodities. Make a list of what you want. Make a list of dream valuations and put some bids in. If you get it, fine. If you don't, you don't. So now we're going to give what our favorite silver company is. That's MAG Silver. We've been recommending it for 2 years. We had a 5-year target of $40. It's trading about $15 now. To me, it's well undervalued. Why do I like it? Well, first of all, it's silver. Obviously, it has good management, undervalued, but there's plenty of potential exploration and discovery upside, which is one of the reasons we like it. If there's no discoveries, it will be 50% higher than now. If there are discoveries, it will be at least a double, in our opinion.
Hello everybody, and welcome to the MAG Silver A-Fund presentation for the 20th of March. We'll be making some forward-looking statements today, and I draw your attention to those. MAG Silver, we have 3 assets. The Juanicipio mine, which we started up in the beginning of 2023 in Mexico. The Deer Trail Greenfields exploration asset in Utah, and the Larder Greenfields exploration asset in Ontario. We're in wonderful shape. We have $113 million in cash at the end of September 2024, no debt, and we have lowest decile all-in sustaining cash costs in the business. The opportunity at MAG is that we are a silver company. 75% of our revenues come from silver, another 10% from gold, 85% from precious. We're in the preeminent silver district in the world, and that mine in Zacatecas in Mexico is operated by Fresnillo PLC, the world's largest silver producer, who own 56%, and we obviously own 44%. We really believe in silver. It's a fantastic time to be a silver producer. A market in many successive years of deficit, declining inventories, increasing demand. The future for silver is quite bright in terms of price appreciation. So Juanicipio, it's operating steady state now. The Deer Trail project in Utah and the Larder project in Ontario, we released a press release updating the exploration at those properties last week, so I draw your attention to that, and I won't talk about that. I want to focus on Juanicipio today. It's one of the largest primary silver mines in the world. It sits there, the red joint venture ground on the Fresnillo trend, the most endowed silver district in the world. 1 of every 10 ounces of silver ever made came from there. We have a high-grade mine, and we beat the guidance last year. It was an increased guidance, and we beat it, and we've got great margins. $4.57 per silver ounce sold gives us a great platform to grow the business. And here you can see in the dark blue columns, the mine is now at steady state, and we're looking at optimization and efficiency gains. Moving forward to 2025 guidance, again, we've got very solid grades, very robust production profile. And what makes this operation, this project so special is the red arrow. It's a fluid upwelling zone. It's the source of metals where they came up close to the surface of the earth that we can mine them. Here's our mine in blue. That's our reserves. That's a 13-year mine life. We have the same endowment in resources which aren't even in the mine plan at the moment. You can see here in the bottom left how even last year, just from one of those structures, we mined 40,000 tonnes at 657 grams per tonne. It's not in any mine plan. It's not in any cash flow models or anything. There's just benefits on top. Strong margins mean robust cash flows for the life of the mine, and there's more to come. We've only explored 10% of the property. We believe there are 3 other upwelling zones on the property. Please go to Mag Silver, www.magsilver.com for more information, and thank you for your time. Bye.
Take a look at this chart. It's a 1-year chart from 2 days ago, and look at the difference, how Mag Silver outperformed silver. So if you're a silver bull and think we're going to 38 and 40 and 50, I can almost guarantee, there's no such thing, but I can almost guarantee you'll make more money owning Mag Silver. If silver does retreat somewhat, as we think it will, it may drop a little bit short term, and then going forward, when silver stabilizes, which it will, at whatever number, whether it be 26, whether it be 30, whether it be 24, then as a buy and hold, you will outperform with Mag Silver. Anyway, just think, and that applies to most quality producing, profitable, well-run companies. Unfortunately, at this time, Portofino Cosmetics, which is a favorite of ours, was unable to provide the 3-minute update. It is basically AI and cosmetics, and if that doesn't whet your appetite, we recommend going to their website. Now, they're going to be presenting for us on the 25th of March. So what we will have, and we're doing something different now because we do 8 presentations a year in New York, where we have 3 companies present for us over lunch. But obviously many people can't attend and want to know about it. So rather than putting out long 18-minute and 25-minute presentations, which may or may not interest you, each of the 3 companies will have a 3-minute presentation like you've just seen here. We'll post it up that evening. So you should, if you go to our YouTube account, just subscribe so you can decide to come, and you'll be able to hear why we're so excited about this. And they are planning to present for us in New York on the 17th, where there'll be a full presentation. That's of April. So this is a very exciting idea, and there's many more than just AIs and cosmetics. It's something to watch. It's a high risk, but extremely high reward company. So Portofino Cosmetics, it's a Canadian company. So our view, limited market upside, which means we want to be long short or defensive. So the thoughts are the following. Nobody will argue that there are great physical and economic challenges in 2025. We suggest be prepared and caution advised. A market professional tries to make money whether he's right about the market or wrong about the market. Obviously, it's easier and more fun when you're right. But even if you're not, you can make money in the markets. The most important thing is to have the ability to buy if and when markets panicked, as they did in October 22, where they made this summer, where they made in the beginning of the year. As long as you have plenty of ability to buy, then don't worry about it. Because in general, it's how long you're in the market as opposed to timing it. As astrologers, we like to time it, but it's not necessary. Remember, in the year 2000, NASDAQ was 4,000 to 5,000, and here we are more than triple. So it's how long you're in the market, if you choose good companies that are solid. Winners and losers, there's no question this year, next, good stock picking will greatly outperform index funds. I've been saying that for 2 years. We've equaled them, but we haven't outperformed them. Actually, we have, but most people haven't. And again, this is trader's paradise. That means if you're a trader, and we trade like as we did at, say, shorting gold at 30.55, it goes down $20. We take half of it off. We hold the rest. Very often stopped out, trade it again, as we did again, sold it again, take half of it out, and we'll see what it makes. So you have to have some discipline, because if you don't watch your profits, they disappear. And if you're an investor, longer-term horizon, as we have with Mag Silver, which we came in 2 years ago, and we've been in 13 and 15 at 9 across the board. While it's stuck at 18, we think it will go to 22 and 25 and eventually 40. So longer-term horizon for good companies, be like Warren Buffett, shorter-term trade. So what we want to suggest is, because of the markets being where they are, we're going to do 4 presentations a year. The next one is in May 1st. Would we say sell in May and go away, which we normally do but did not last year because of the eclipse that we had. And this year we do have 2 weeks where Trump has some very positive news, whether it shows up in the tariffs, Ukraine, or beforehand. So do sign up, please, on our website. I should be on the YouTube website, so that you'll be notified. The next event is May 1st, and we will be next week showing 3 of our companies that will be presenting, and each of the months that we do, 8 times a year, we'll give the 3-minute introduction so you can see some very good, interesting companies to track. I want to thank you all for attending, and I wish everyone a very, very pleasant spring.